Europe's equity rally has momentum, but does it have durability? After their strongest year since 2021, European equities are back in favour. Lower interest rates in the US and a surge in spending have helped Europe win over global investors. But warning lights are flashing, as optimism may be getting ahead of fundamentals. So is investors' faith in Europe intact? Georges Debbas, head of European equity derivative strategy for BNP Paribas. So Georges, one key indicator suggests that European stocks are the most overbought they've been in a decade. Does that point to healthy consolidation or close to a market top?
I do not believe that many of the indicators are yet in overbought. If you look at valuation, they're a bit more expensive than they were last year, but they're still on the average over the past 10 years. Allocation to Europe remains quite low compared to historical standards. And if you look at our own proprietary position indicator, it shows that discretionary investors are still a bit underweight Europe. So yes, potentially that technically speaking, we might have reached oversold territory, overbought territories, but then as a strategic long term, we still think that Europe has more room to grow.
Well, for the first time in 3 years, some are calling for a return to earnings growth in Europe in 2026. Does the upcoming results season support that optimism?
We do expect actually growth to come this year. But do we expect this upcoming earning growth, which is a reporting of Q4 2025, to have much growth in debt in it? No, we do not think so. But we're looking for guidance and we expect growth to come in 2026.
Let's talk more about growth, and a key concern is whether Europe's economy is growing fast enough to justify what markets are pricing in. Do you see Europe's sluggish growth persisting?
No, actually BNP's house view, which is ahead of consensus, is that Europe as a whole will grow 1.6% GDP in 2026. If we look at 10 years or 20 years historical relationship between GDP and earning growth, we actually reached the level which is expected in the market, anything between 8 to 10%, depending on which metric you're looking at. So we're quite confident with the level of growth for this year, both GDP and equities.
Zooming out, European equities still trade at a deep discount to US peers. So is the renewed demand simply a diversification trade?
Not really. It's a bit more about the worries around the AI leadership in the US. Big tech has rallied quite a lot, and there's concerns around the monetization aspect. Right now, people are looking at the diversification or rotation out of these winners into other areas. Most notably, Europe has a good story to sell and also continues to trade at a discount, as you're saying. So it's natural way to actually put a bit more capital to compare to the US or to the big tech within the US.
Let's talk Germany, and its historic shift towards fiscal stimulus has raised hopes of a broader rebound. When does that start to meaningfully feed through, and does it benefit Europe as a whole?
Yes, to the latter question. We do think that it's already putting in the number. We believe that potentially the growth or the deceleration in Germany would have been even worse without the fiscal spending that started really hitting the tape in Q4 of last year. But from an earnings momentum perspective, we do expect this coming into this quarter and onwards.
So finally, Georges, political risk remains a weak spot for Europe, with France's budget strains a reminder of the broader fiscal pressures. Is that enough to shake investor confidence going forward?
We don't believe so, just because there has been a very strong political and also structural shift over the past year or two within Europe, which overweights any potential concern on the micro level. And as a quick reminder to all listeners, Europe, or France particularly, as you've mentioned, only generates 14% of revenue for CAC and even less for the whole of European equities. So overall, it doesn't really have a very big effect on the equities.
That was Georges Debbas from BNP Paribas. Don't forget, you can watch more videos on Reuters.com.